Hi all, today we will have a second video on the 9 a.m. model and an explanation of today's trade to start. We will look at the H4 chart. As you can see from yesterday, it has not changed much. As you can see in the top left corner, we have buy side liquidity plus SMT and H4 disruption structure from the bottom left corner. We have sell side liquidity capture, and the only change we have is the capture of PDL, which is also sell side liquidity for us. The target for us as a DOL, in my understanding at the moment, has been previous. Now let's move on to the H1 chart. What we see on the H1 chart, the first thing we see is the London kill zone, where EQH was formed on its high. Also from here, we see the capture of the previous day's low. Next, we see a violation of the H1 plus FVG H1 structure after price formed equal highs in the London kill zone. We got a pullback to the H1 FVG zone and also got an SMT. Based on what we have now, the first obvious pool of liquidity for us is the equal highs in the London kill zone, and also which is the London high. As we remember from the previous video for the 9 a.m. pattern, it is important for us to find the obvious pool of liquidity that will be the first to be attacked during the time between 9 and 12 in the morning, New York time. Let's move on to the M5 chart, which we see on the M5 chart in the New York Midnight Open area. We have buy side liquidity in the form of also equal highs. We see that we have a second SMT after 9 in the morning on the M5 chart. This gives us an understanding that the first obvious zones for price movement will be the first equal high in the New York Midnight Open zone and the second in the London high EQH area. How did my execution happen after receiving SMTs, since we already have two SMTs and we have two obvious liquidity floors at the time when the price it began to show signs of strength, that it was ready to move towards our obvious liquidity bullets? I pressed a market order, I placed a stop loss behind the second SMT zone, and I placed a take profit just above the first EQH zone. So the deal was closed with literally one candle and continued to move towards our second target is the London high. But if you pay attention to the chart now, you will see that the price reacted to the second point of our obvious liquidity pool and received a reaction in the form of a sweep. Thus, we can understand that for the 9 a.m. model, it is important to identify the obvious liquidity pools that will activated within the period of 9 and 12 in the morning. It is desirable that this activation occurs from 9 to 10 or from 10 to 11, because usually the price becomes quite slow after that. I hope this second video was informative for you. Write comments and tell me what I can improve further in my video to make it clearer for you. Thank you all for watching.